Small business funding grants, what you need to know. Cash flow problems rarely wait for a grant committee. If you are searching for small business funding grants, you're probably trying to cover startup costs, buy equipment, hire staff, expand inventory, or keep operations moving without taking on more debt. Grants can help, but they are not quick or easy money. The real advantage is obvious. If you win, you get capital you typically do not repay. That said, grants work best when you understand where they fit in a broader funding plan. For many business owners, the right move is not choosing between grants and financing, is knowing when to pursue both. How small business funding grants actually work for small businesses. Small business funding grants are awards given by government agencies, nonprofits, corporations, and local development groups to support business activity. Unlike loans or lines of credit, grants usually do not require repayment. That is why they attract so much attention and so many applicants. The catch is competition. Most grant programs have narrow eligibility rules, fixed deadlines, and detailed application requirements. Some are designed for startups, while others target existing businesses, rural operators, women-owned companies, minority-owned firms, veterans, manufacturers, or businesses in specific industries such as food service, technology, clean energy, or community services. Many owners assume a grant is free money for any small business. In practice, the grant provider usually wants something specific. That might be local job creation, innovation, sustainability, downtown revitalization, support for underserved founders, or recovery after a natural disaster. If your business does not align with that goal, your odds drop fast. Where to find small business funding grants in times of need. The best grant opportunities are usually tied to your location, ownership profile, industry, or business mission. Federal programs get the most attention, but they are often the most competitive and the slowest to process. State, county, city, and utility-backed programs can be easier to qualify for if your business fits the target. Corporate grant competitions are another option. These often appeal to newer businesses because they may be less paperwork-heavy than public programs, but they still require a strong story, clear use of funds, and proof that your business is viable. Nonprofits and business support organizations also offer grant opportunities, especially for underrepresented entrepreneurs. A practical approach is to search in layers. Start with local and state-level grants, then industry-specific programs, then national grants. This saves time because local opportunities may have fewer applicants and more relevant criteria. Who qualifies for grant funding and what you should know. Qualification depends on the grant, but there are common patterns. Your business may need to be legally registered, active in the U.S., compliant with tax requirements, and able to provide financial records or a business plan. Some grants require a minimum time in business. Others are reserved for startups. Ownership structure can matter too. Many programs specifically support women-, minority-, veteran-, or disabled-owned businesses. Location also matters. A business in a rural county may qualify for opportunities that an urban business does not, and vice versa. Industry fit is another major factor. A retail shop, trucking company, salon, restaurant, contractor, consultant, online seller, or healthcare-related business may each see very different opportunities. Grant funding is rarely broad enough to ignore those details. What makes a grant application competitive? A strong application does not sound like hype. It sounds focused, credible, and specific. The grant provider wants to see that your business has a real plan for the money and a realistic path to results. Your use of funds should be clear. If you say the grant will help growth, explain exactly how. That might mean buying a delivery vehicle, adding point-of-sale equipment, launching a new service line, hiring 2 employees, upgrading energy efficiency, or increasing inventory before a seasonal rush. Specific plans feel lower risk. Financial clarity matters just as much. You do not need perfect numbers, but you do need organized ones. Revenue trends, expenses, margins, payroll needs, and project budgets should line up with the story you are telling. If your proposal says expansion is the goal, your numbers should support that case. It also helps to show impact beyond your business. Some grants focus on job creation, neighborhood development, sustainability, or community benefits. If your company solves a local problem or serves an underserved market, say so plainly. Why grants are worth pursuing and where they fall short. The upside of grants is simple. Non-dilutive capital can reduce pressure on cash flow and let you invest in growth without monthly repayment. That is valuable for businesses with tight margins, early revenue uncertainty, or strategic projects that may take time to pay off. The downside is timing. Grants often involve long application windows, review periods, interviews, and delayed disbursement. You may spend hours applying and still hear nothing for months. Some programs fund only a handful of winners. Others reimburse expenses after you spend the money first, which is a real obstacle if cash is already tight. That is where many small business owners get stuck. They chase grants for immediate needs that cannot wait. Payroll, inventory gaps, emergency repairs, rent, and urgent marketing pushes usually require faster access to capital than a grant can deliver. Grants versus loans and lines of credit. What you must know. A grant is best when the project is planned, the eligibility fit is strong, and the timeline is flexible. Financing is usually better when the need is immediate, the opportunity is time-sensitive, or the business needs predictable access to working capital. For example, if you need to replace equipment this month to keep revenue coming in, waiting for a grant decision could cost more than financing the purchase. If you need inventory before a holiday rush, a business line of credit may be more practical than a grant application that takes 10 weeks to review. This is not an either-or decision. Many owners use grants for strategic upgrades and for financing to increase speed. That combination can make a lot of sense. A grant might help fund a larger project over time, while a loan or line of credit covers immediate operating needs and keeps the business moving. For businesses that need fast options, AVI Business Solutions. COM helps connect owners with funding products designed for real operating pressure, including working capital and credit solutions when waiting is not realistic. How to build a smarter grant strategy for a sure outcome. The best grant strategy is selective. Do not apply to every program you find. Apply where there is a real fit and a real return on your time. If a grant requires extensive documentation, multiple essays, and a formal presentation, ensure the award size justifies the effort. Keep a grant-ready file so you don't have to start from scratch each time. Basic business registration documents, tax records, a short company overview, owner bio, pitch deck, financial statements, and a current budget can save hours. A one-page explanation of how you would use the funding is also useful, as many applications ask similar questions. It pays to track deadlines and decisions in one place. Business owners lose opportunities simply because they miss filing dates or forget which documents were requested. A simple spreadsheet is enough if it is accurate and up to date. Also, be honest about your immediate funding gap. If the business needs capital now, solve that first. Grant hunting should not distract from urgent operating decisions. Red flags to watch for. Legitimate grants do not guarantee approval and usually do not ask you to pay a large upfront fee to access the application. Be cautious with services that promise certain grant wins, especially if they avoid specifics or pressure you into expensive packages. Another red flag is pursuing grants that don't align with your business just because the funding amount looks attractive. A weak fit application takes time away from stronger options. The goal is not to apply more. The goal is to apply smarter. You should also read the fine print on fund use. Some grants restrict money to equipment, training, sustainability upgrades, research, or payroll support. If your real need is general working capital, a restricted grant may not solve the actual problem. When small business funding grants make the most sense for your business. Grants make the most sense when your business has a clear project, enough time to apply properly, and a profile that closely matches the funder's mission. They are especially useful for founders in targeted groups, businesses in specialized industries, and companies pursuing expansion tied to community impact or innovation. If your business needs immediate capital, grants may still be worth pursuing, but only as part of a larger plan rather than the entire plan. That is the difference between hoping for money and building a funding strategy that protects momentum. The smartest move is usually the practical one. Go after grant opportunities that fit. Keep your documents ready, and use faster funding options when the business cannot afford to wait. Growth becomes easier when your capital strategy aligns with your timeline.
Running a small business means being ready for anything, but what happens when the big banks say no? At AVI Business Solutions, we say yes.